Hey everyone, my name is Neil from Basta Group. Quick heads up before we get started. You'll notice I'm using sign language in this video, and the voice you're hearing is AI generated. This helps make the content more accessible and clear for all viewers, no matter how they prefer to take in information. Now, if you're an American living abroad, this video is especially for you. US expats often get hit with penalties or miss big savings, not because they're careless, but because the rules are ridiculously complex. So today, I'm breaking down the top 5 tax mistakes expats make and how you can avoid them. Stick around until the end. The last one could literally save you thousands. Mistake number 1, not filing a US tax return. A lot of expats think that because they live overseas or because they don't owe anything, they don't have to file. But the US tax is based on citizenship, not residency. So even if you live in Bali or Berlin, you still have to file every year. Skipping your return might seem harmless, but it can lead to penalties, interest, and even problems renewing your passport. The IRS doesn't care if you live abroad, they still expect that return. Mistake number 2, ignoring the Foreign Earned Income Exclusion, also called the FEIE. This lets you exclude over $130,000 of foreign income from your US taxes, but only if you qualify using the physical presence test or the bona fide residence test. You can't just say, I live abroad and expect it to work. You need to prove it with your travel days or your permanent ties to another country. And if you claim FEIE without actually qualifying, the IRS can remove the exclusion and hit you with a huge tax bill. Mistake number 3, not reporting foreign bank accounts. If you had more than $10,000 total across all your foreign accounts, even for just one day, you need to file an FBAR. That's FinCEN Form 114. And if your foreign financial assets are over certain thresholds, you may also need to file Form 8938 under FATCA. These are not tax forms, they're informational reports. But if you miss them, the penalties can easily hit $10,000 or more. Don't ignore these just because they're not part of your tax return. Mistake number 4, overlooking self-employment tax. If you're a freelancer, digital nomad, or remote contractor, listen closely. Many expats think they're off the hook for US self-employment tax just because they live abroad. But unless you're paying into a foreign social security system and that country has a totalization agreement with the US, you're still responsible for that 15.3% self-employment tax. Even if you exclude all your income under FEIE, self-employment tax often still applies. That's why smart entities set up like an S-Corp can be a game changer. Mistake number 5, not having a tax strategy. Too many expats go year by year just trying to stay compliant. But without a plan, you could be leaving thousands of dollars on the table. Things like choosing between the foreign tax credit and the FEIE, claiming housing exclusions, or making contributions to the right type of retirement plan. These decisions add up. A smart tax strategy isn't just about compliance. It's about keeping more of your money and sleeping better at night. So those are the top 5 tax mistakes I see expats make every year. If you've made one, don't stress. What matters is what you do next. If you found this helpful, give the video a thumbs up, subscribe for more tips, and drop a comment if you want me to dive deeper into any of these topics. And if you're ready to build a real tax strategy that fits your life abroad, click the link below to book a consultation. Thanks for watching, and I'll see you in the next video.